This is Anthem Blanchard, CEO of Numetra, and you're listening to RunToGold.com.
Welcome to the RunToGold.com podcast. This is Trace Mayer. I have a special guest with us, Anthem Blanchard. Welcome, Anthem.
Hi, Trace.
Now, Anthem, he's currently CEO of Numetra, which is a federated CDN, a content delivery network, and they're working on a new innovative approach to transferring bandwidth over the internet. Anthem, you've been involved in the gold industry for a long time, haven't you?
I have, since I was born, actually. So I was raised by a gold bug, James U. Blanchard, and it was a case of really being indoctrinated into Austrian School of Economics and understanding what real money is. And then I also went to the traditional school of finance at Emory, and then we actually went back into the gold industry. So I'm very familiar with gold as well as the traditionalist type mentality for monetary policy.
We're very grateful to your dad. He was involved in the sound money fight, back when gold was illegal and there were criminal penalties for holding this most dangerous of all controlled substances, this inert yellow metal. He actually campaigned quite a bit in the public sphere to get gold re-legalized. So we're very grateful for your family's work in that regard.
As am I.
Now, Ben Bernanke, last week on Capitol Hill, he testified, quote, "I don't fully understand movements in the gold price," end of quote. And so, I'm trying to figure out which is more frightening, that investors worldwide are losing confidence in these little paper coupons, or that the shepherds of these major world reserve currencies like the dollar or the euro, these colored coupons, that they don't understand what's going on with money. So I was wondering if you could speak a little bit to that.
Sure. Well, I think that really for me, it draws to a deeper conclusion and understanding that, quite simply, one is never educated at all throughout the educational process, at least the one that I had and the one that pretty much everyone I've spoken with has had, and actually learning about gold and important as really being the truest money and the truest measure. Some of the ways that you can actually look at gold, the reason why it's one of the truest measures is that, if not the truest measure, is that it, comparatively speaking, valuing one asset class versus another, you can really distinctly tell that gold holds its value because it is value, and so therefore it makes comparative ratio type exercises, puts on a, so to speak, x-ray glasses, and it's a secret decoder of sorts. So once you know that secret of looking at comparative value, then price in terms of a national currency becomes somewhat relevant.
Yeah, I wrote an article on it, the numeraire. We've got to
Yes, I love that article.
Yeah, we use gold as our unit of account. We don't necessarily need to use it in ordinary daily transactions, although that has some wonderful uses when done, when we do use it. But even without that, we can still keep our financial statements, our income statements, our balance sheets, our cash flow statements, we can keep them denominated in gold. And then, as you say, we're able to more accurately calculate prices, which are really just the ratios between two different assets. And so when we're using these synthetic commodities, these little colored coupons that have no value in themselves, well, how do we get a reliable measure? As you say, we got to use an asset which is, in effect, nobody's liability, that's value in itself.
Exactly. And as you very well know, any fractional reserve banking system by nature issues liability currency. So again, it's the right to pay, right to the bearer actually to pay is what originally we had back in the gold standard days. But today it's really just the fiat decree of a debtor, and particularly the governments, having to accept or having having to get paid in these national currencies. So it's very difficult to get comparative value off of a liability, off of any sustainable long-term period. Makes it very difficult to make wise choices.
Yeah, exactly. We've moved from money to money substitutes, from money substitutes to these little fiat currency illusions, these little coupons, going from, what do they say, the dollar's an I owe you nothing, and the euro's a who owes you nothing. And so, when we do look at these fiat currencies, in effect, they're just common stock, the common stock of the various institutions or organizations that they represent, whether it's this entity known as the United States or this entity known as Euro or Iceland. And since all of them are declining relative to gold, it does portend some turbulence in the future, like we're seeing politically. So it is kind of a scary time that we're moving into, but at the same time, for those of us that are able to put on these x-ray glasses, I think there's a lot of potential deals to be made and to be had if we're able to accurately discern what's going on.
Well, there's no doubt, and again, I know that I've been able to use it quite successfully for myself personally to make, choices about, value, where to invest or where to save my value. And, it's been quite good for me. So I think the charts really speak for themselves. And you have a lot of great charts on your website. And it's really just once you're able to see over, long-term, multi-decade period, one asset, specifically gold in this case, you're able to take a look at, say, the price of oil in terms of numbers of grams of gold or the Dow, it paints a whole different picture.
Yeah, because actually on my website in the top, in the top banner area, there's a link. It's called Key Ratios, and I've got some of the various key ratios there. And you mentioned one of them, the Dow to gold ratio, and everybody is all, they're all happy that the Dow's doing better. It's over 10,000, and oh, there's a recovery. But really, when you look at the Dow priced in gold, we're currently at 8.38 ounces of gold for the Dow, which is lower than we had, several months ago. So the Dow has actually been falling, losing even more of its value when priced in gold. And we're kind of seeing the same thing with barrels of oil. Right now, it's 1.73 gold grams per barrel of oil. So, I'd like you to speak a little bit more on how exactly do you use these ratios with each other to make better investment choices?
Well, I mean, for myself personally, again, I like to look at that, what I call ultimate savings investment cycle barometer in that Dow gold ratio. And the reason I like it so much is that gold, as a relic of the end of World War II, the Bretton Woods Treaty, is priced on all the major exchanges, and specifically the London bullion market. It's primarily set in dollars in terms of receiving payment. They do set in other currencies, but the vast majority of the clearing gets done in dollars. So, and you have the Dow and all of the earnings, the unit of account for the Dow 30, irrespective of which those companies are, and those are meant to represent the industry, the big industry players obviously in the U.S., also is the dollar. So by canceling out that dollar in the numerator and the denominator of the ratio, one all of a sudden is able to take the most variant of all variables when it comes to finance, given the foreign exchange market is the largest in the world and the dollar is by far the most circulated currency, national currency, that all of a sudden it illuminates the picture to really be able to see how expensive or cheap are investments relative to savings, and how long left do we have to go roughly until we get to the investment cycle.
Yeah, and it does. It really makes me wonder, does Bernanke really not, quote, fully understand the gold price movement, or is he just feigning ignorance? Because it really boggles the mind to think that people that are in charge of these institutions that are moving trillions of dollars around of value, that they don't understand the role that this monetary metal plays. Because the LBMA you mentioned, I think that their actual daily transactions were up something like 40% year over year. So there's a lot more gold changing hands this year on the LBMA than there was last year. And so, there's gold is functioning as a major currency with tens of billions of dollars changing hands every day. So yeah, I think that there's a lot that we as investors can gain from being able to use it to perform the calculation of value.
Absolutely.
I think we've used up about most of our time. Do you have any recommendations or tips for the listeners that run to gold?
Well, I would suggest to focus on savings type investments, and obviously, in terms of the ultimate form of savings, being able to look at gold as being that ultimate form of savings, but also looking at cost-cutting savings cycle type plays. So whether that's media, whether it's forms of escapism, unfortunately that's what happens in savings cycles is people have to save, they don't want to spend as much. Anything that can get people distracted out of their, unfortunately for so many, more difficult financial situations. I think that's a real growth industry, and history is a very good indicator of that. So those are my passing thoughts.
So we're things like the $5 Starbucks every day is not so much a good play in the savings cycle.
Yeah, it would seem to be a pretty easily substitutable product, and I guess you can look at McDonald's in that specific example. So it's garnering a lot of market share.
Okay, well, thank you very much for this discussion, and we'll have you on again, just like we've had you on before.
My pleasure, Trace. Anytime.
Hi, it's Ian Gordon from longwaygroup.com, and you're listening to Run to Gold.